From Kansas State University, this is Agriculture Today. Eric Atkinson with you. Here's what's ahead. For this week's cattle market segment, we welcome in Oklahoma State University's Derrell Peel. In addition to recapping last week's trade, Derrell will thumb through the latest year-to-date beef export and import data from the USDA. The numbers there, quite favorable. Then, the first of three features this week on non-traditional agricultural financing. K-State's Jenny Ifft and Purdue University's Brady Brewer will talk about how non-traditional financing is claiming a greater share of the agricultural credit market. And on this week's wildlife management segment later on, K-State's Joe Gerken covers ways of removing that algae growth from farm ponds. All that here on this Agriculture Today. You are listening to Agriculture Today, and we're glad to have you aboard to get the new week going. And the cattle markets are in the spotlight, first of all. Talking now with Derrell Peel, livestock economist at Oklahoma State University, who joins us regularly. Well, Derrell, let's just take a quick glimpse back to last week's trade, and it would appear that it was fairly steady going, at least on the cash-fed cattle side of things.
Yeah, I think so. Steady to, maybe a slight improvement. I think there was a fair range. Some of that, I'm sure, was limited trade. But, on average, I would call it fully steady for last week on the fed cattle market. Just nothing much there to move that market one way or the other? There really isn't right now. I mean, you kind of got, sort of opposing forces here. Box beef has been, stagnant to a little weaker. On the one hand, seasonally, we kind of tend to think of fed cattle markets starting to drift off a little bit here into the middle of the year. But at the same time, slaughter rates have been good. I think the feedlots are pretty current. So, again, we've kind of got this balance of forces right now, and nothing really that would, grab a hold of this market and push it in a vastly different direction. On the cash feeder cattle trade, just a quick glimpse to the Kansas auctions suggested that there was some strength building back into those prices. What were you seeing there and in Oklahoma as well? Well, I think so, and I suppose, probably the most logical candidate to explain that would be the fact that we have gotten some rain in some areas. So there's probably going to be a little bit of revival of some summer grazing kinds of prospects. And then, overall numbers, again, are working their way to tighter. We haven't seen it yet in the feedlots. We keep waiting for it. But in general, the numbers are going to be supportive in general as we go forward from this point. You bring up the recent moisture in parts of the Central Plains. Not everybody was graced with that rainfall, of course. We still have a sizable drought hole to dig out of in this region, Derrell. And as you think about forage availability, as you track this closely as part of your analysis, what are your latest thoughts on where we stand there and what might be ahead? Yeah, well, we did get some rain across parts of Kansas. I'm not maybe as familiar with that. Certainly across central Oklahoma, and then eastern Oklahoma got a lot of rain in some cases. We have some fairly serious flooding problems there. But we're clearly chipping away at some of the drought. The far west regions that were the most severe drought did not participate very much in that other than in a couple of isolated spots. So, but, the bigger picture here I think that's very important is starting in May, USDA includes pasture and range conditions in their weekly crop progress reports. So we get those from May through October. The first one of those came out last week, and 56% nationally, 56% of the pastures and range in this country are in poor to very poor condition. Wow. As of that time. And that's by far the worst that data series has ever been when it starts in May. So, we clearly have a large, amount of drought out there across the West in general. And so, all of these rains are helpful in that standpoint, chipping away kind of at the edges of it. But we've got still got a lot of drought issues to deal with. And that then translates into very little impetus for the industry to expand cattle herd numbers. That just isn't in the foreseeable future. No, absolutely not. Given those conditions and this late date, again, even areas that are dry, some of the really droughty western range areas, if they did get a little bit of moisture, they may get some very useful short-term benefit out of this because warm season pastures or native range will respond to this rain. And it may only buy them a few weeks of a little bit of, sort of wiggle room here, but that could be very useful. A lot of producers were really right up against having to make some very tough decisions. So from that standpoint, this is helpful, but it doesn't really address the broader and bigger drought issue that we have to contend with.
Spending the rest of our time on the demand side, watching boxed beef trends, this question comes up, Derrell. As consumers may be starting to worry more about such things as higher inflation, are consumers starting to back down from their interest in higher-end beef with those economic signals in play out there?
I've been watching that very closely and will continue to do so. But honestly, at this point in time, we don't see a lot of evidence of that yet. If you look across the various wholesale cuts, the middle meats to the more value cuts and so on, it's not clear. Obviously, there's always a little bit of mixed signals there, but in general, it looks to me like beef demand is holding up well. Retail prices for all of the meats are high, and that's part of the story. Just because beef is expensive, so are pork and poultry, frankly. And so consumers, if they're going to eat meat, and they will continue to eat meat, don't have a really obvious place to go at this point. So we're watching it. I think at some point the constraints on disposable income will affect consumers, and we'll see some tempering of demand, but it has remained remarkably resilient up to this point.
Thank goodness for the benefit of our producers out there.
Yes.
You have the latest monthly beef trade demand to share as well. And how does beef fare on the international consumption scene?
On the export side, we have data now for the first quarter of the year, January through March. Beef exports are up about 6%, a little bit over 6% for the year. On a quantity basis, value is even higher than that. And you remember that in 2021, we set an all-time record for beef exports. So we're still on a strong pace for beef exports, and that includes now actually for the first quarter of this year, South Korea becomes our biggest market. They're a little bit ahead of Japan. We'll see whether that persists. They've been closing the gap for several years here, for the last couple of years anyway. Japan is number 2, and then that China-Hong Kong combined market is a solid number 3 and advancing, into the picture there. So those are the 3 biggest markets. And then, of course, actually Canada and Mexico are the 4 and 5 markets, and they've continued to slip a little bit. We're down a little bit under 8% shares for both of those 2 markets.
And just to build upon that, there was recent data out of the USDA, out of its Foreign Agricultural Service, and it took a broader view of global beef exports and imports. And as we look at those numbers for 2022 so far, well, leading the pack as far as exports, the country of Brazil, and it's not really even close, it doesn't appear, Derrell.
No, that's right. Brazil has been solidly the number 1 beef exporting country in recent years. There's sort of a next tier behind them that includes the U.S., Australia, and India, but they're all pretty close together, and they're about 60% of the level of Brazilian exports. And I should mention that, the U.S. is one of the countries that Brazil exports to, and we've seen a dramatic jump here in the first part of the year in U.S. imports of Brazilian beef. And I don't think it will necessarily maintain that pace, but we're probably going to see more imports into the U.S. from Brazil because they do have more access now with fresh product than they had previously. So, that's one of the places they're exporting to. China, obviously, is the biggest beef importing country in the world by a long shot. China, Hong Kong, you put them together, and they're, 2.5 times almost what the U.S. is as the number 2 beef importing country. So those global trade profiles continue to evolve and develop over time.
You mentioned China being the hot market for importing beef from various points around the globe. But what are some of the other countries as we look forward that the U.S. might gain a toehold in as far as exporting our beef to their shores? Our major markets are pretty well defined. Again, China, Japan, South Korea are the big ones. Mexico and Canada as North American trading partners hang in there. There's a wide range of sort of next level smaller countries that, collectively are very important. Individually, none of them, really rank very high in that. But one of the things that we observe over time that I think is very good for the industry, very sort of risk managing, is that we've developed a more diverse set of export markets. And anytime in any business, if you're, heavily dependent on one
customer, then you're at somewhat more risk. And compared to, say, 20 years ago when we exported largely to Japan and everybody else was way down there, we now have a series of export markets that are much more closely balanced. And, of course, they represent different products, which also adds value to our industry because we export different mixes of products to different markets.
So all in all, it sounds like U.S. beef sales abroad are in a good place right now.
Absolutely. They really are at this point. Again, we see this diverse mix of products. It's very supportive to our industry domestically because it helps us sort of balance the products that we like here in the domestic market. And so, again, international trade does carry inevitable risks, but, that's where the growth potential is for the U.S. industry, and we're doing very well in that. That part of our beef demand continues very solidly.
Always good to hear. Finally, your thoughts on the trading week ahead for the fed and feeder cattle markets? Any inkling as to where we might go?
It's really hard to, we said the fed cattle market has got a lot of direction right now, and I guess until we see something change that, as we move through May and into June, we'll see some seasonal changes in slaughter rates typically. So there'll be some of that. We are watching that box beef market, and the fed cattle market will certainly take some cues from that. So I think there's a number of things to keep an eye on, but it's really not clear that we would expect a lot of trend on the fed cattle market. Feeder cattle, like I said, may benefit from this moisture and a little more grass demand on the lightweight cattle. They're tending to fall seasonally a little bit right now, so that may help moderate that a little bit as we go forward.
Your input always appreciated, Derrell, and we will catch up with you again in a few weeks. Many thanks right here.
You are very welcome anytime.
That from Derrell Peel, livestock economist out of Oklahoma State University. We'll return with more on Agriculture Today. Welcome back. You are listening to Agriculture Today. What we'll focus on not only on this segment but in other segments during this week's broadcasts, a closer look at the surge in the growth of what's termed non-traditional agricultural finance. A group of agricultural economists from assorted land-grant universities, including K-State, have pooled their efforts to work up a thorough analysis of non-traditional farm lending activity here in the U.S. Jenny Ifft is with us, agricultural risk management specialist at K-State, and a former graduate student here at K-State, now an agricultural economist at Purdue University, Brady Brewer. They're two of the collection of economists who are contributing to this. Jenny, if you'd set the table here, when we say non-traditional agricultural finance, in specific terms, what is that and why is it important?
Right. So we think of traditional lending as majority lenders, so farm credit system lenders, commercial banks. The Farm Service Agency also services a lot of borrowers. So it's lenders that are working out of this space. You have some large private lenders. You can think of Rabobank, life insurance companies. There's a lot of vendor finance options right now. Also a diverse group of collateral-based lenders. So you can think of the Farmers Business Network, Conterra, AgResource Management, a lot of examples. It has been growing, and we think it's important from a farm management perspective to put out information out there about the different options and what are the characteristics and costs of those. It's also important from a policy perspective. Even a relatively small number of bad loans or farm bankruptcies could have a broader impact, say, on regional land markets or even triggering a farm sector downturn. So that's something that financial regulators, policymakers take a look at. They need to know the volume and risk associated with farm lending, and non-traditional lending isn't always publicly reported. So this is harder to do. All
right. Brady, bring you in here. What you, Jenny, and the others have done is pulled together information from various research projects looking at non-traditional finance.
When we do research for, academic purposes, we publish our research in these journals, but occasionally we want to get momentum in a particular area. And when we looked at the area of non-traditional finance, we saw that there wasn't a whole lot of research on this for a lot of the reasons that Jenny just mentioned. Their data is typically private. It's not public, so it's hard to get a hold of to assess some of these lenders. So we wanted to gain some momentum to learn more about how these non-traditional lenders are impacting the ag credit markets.
Mm-hmm. And it's come together in the form of a paper that digs into all of these various angles on non-traditional finance, right?
Yeah, so in total, researchers from across multiple land grants around the nation got together and collaborated on specific research projects that we pulled together in a special issue in a journal called the Agricultural Finance Review.
Very well. Well, let's start mining down into the findings as they have been uncovered in this effort. And Jenny, the market share, and that is to say the share of the lending among our farmers and ranchers out there and our institutions that would be described as or attributed to non-traditional financing. What is that and how does it look?
Right. So the market shares, it's hard to measure because we don't know. These numbers aren't always published or official. So the editors of the special issue, Brady and I and one of our other collaborators, we came up with an estimate that non-traditional finance could have a market share as high as 25%. And some of the studies within the special issue support this. So we looked at the secondary market for farm real estate loans, and non-traditional lenders have recently grown to a third of the volume of that. We also have learned that commercial banks report a lot of competition with non-traditional finance as well as others. And then there's data from, say, Wisconsin or Kansas, farm management data, that shows that non-traditional finance has a large market share.
So it's been growing. Brady, the expansion of this is very evident, but as you and your colleagues view it, what's that expansion look like?
So when you look at these non-traditional lenders, they a lot of times are lenders that their primary purpose is not to do loans. This is a farmer going to an equipment dealer and also being offered credit financing for the piece of equipment that they're looking to buy. So they've expanded this market share by, in large parts, a lot of it is a convenience factor. The farmer doesn't have to go to their traditional commercial bank or a farm credit system. It's a one-stop shop. The other ways that they've expanded is they've served farmers' needs that may not have been traditionally served. And this is done in a couple of ways. First, they may offer loan products, maybe ones that have lower down payment requirements. Maybe they're serving farmers in particular sectors that commercial banks or the farm credit system shy away from due to regulatory reasons. So they're also serving, new segments of the ag credit market as well.
There's maybe the term would be fair, a stigma associated with non-traditional lending. It might be a riskier proposition for the parties involved. And this has been explored as well in this overall effort, Jenny.
Right. And generally, again, there's this concern that if you don't know how much is out there or how risky there is, that's a potential concern. It's not necessarily worrying in itself. And we're definitely not talking about true lenders of last resort here. We're going to have to do a 20% interest rate and sign off half of your farm as collateral. And so we had several studies in the special issue that looked at the risk associated with non-traditional finance in different data sets, whether it was National Farm Survey data or even bankruptcy cases. And the evidence is really mixed, and it's different across different types of non-traditional lenders. So for some of the, looking at national data, sometimes there's not a consistent relationship. Another study looked at vendor financing and found no relationship with financial risk and implement dealer financing, but it did find a larger relationship with input finance and borrower risk. So not a consistent relationship, which is sort of in line with what we expected. It's a diverse group of lenders. You can't really paint them with a broad brush. But there is two important points to make here. First of all, if you talk about, say, beginning farmers who have less collateral, that's an important group to serve, and non-traditional lenders are probably filling part of that space. So if you think, well, they're riskier, that's not necessarily a bad thing. Another point to make, and this is a study that Brian Brigham's going to come and talk about in our next issue, is that some of these non-traditional lenders bring more credit to the table, and they have the capacity to serve more. And generally, that can really have a lot of benefits, too, in expanding credit options.
Brady, in our conversation here, we're sort of bringing out the highlights from this work, but there are a multitude of questions about non-traditional financing that you and your colleagues would like to pursue here, you say.
Yeah, so this special issue does a really good job of exploring how non-traditional lenders are affecting the agricultural credit market, but there's still a lot of work here to be done. First off, getting a grasp on the market share, how many loans they're making to farmers is still hard for us to calculate. So continue to work on that. There's also a lot of consolidation in the ag finance markets. Commercial banks, the mergers and acquisitions we've seen there, it's very rare now you see a standalone hometown bank in a small rural community. A lot of times they're part of a larger system. We've also seen consolidation in the farm credit system as well. So how they impact that, I've already said that they fill important holes that were in the supply side of credit to farmers. So how that plays out in the future, we're going to be paying attention to. There's also secondary markets that purchase and fund agriculture. And we don't have a lot of information on those secondary markets and how non-traditional lenders interact with those. And then lastly, with the onset of fintech or financial technology, which you can think of this as the online applications that help distribute credit throughout the world. These non-traditional lenders have shown that there's outside interest in helping fund agriculture. And how will fintech make it easier or help farmers interact with non-traditional lenders in the future? Will it make it easier to access credit for farmers with these non-traditional lenders? Sounds like you and your fellow economists have work laid out for you to get into all of that, Brady. There's quite a bit to do yet. And again, this is part of a series that we'll conduct this week here on Agriculture Today, looking at non-traditional financing. And Jenny, you'll be part of our subsequent get-togethers here. What are some of the other things we'll be taking on here?
So in our next episode, we're going to be talking about the current macroeconomic environment. We haven't seen this level of inflation or the potential for an increase in interest rates for a long time. So what does this look like in today's credit markets, especially with all this growth in non-traditional lending? So we're going to answer that question. We're also going to have two specific sets of authors come on. One study looked at bankruptcy rates and data on that. And so how do different types of lenders make out in that? And then we're going to have another study that looks at FSA financing and non-traditional lenders.
Very well. And those will be on Wednesday and Friday's broadcasts, respectively. In the meantime, there's a summary of this agricultural finance review on non-traditional credit in U.S. agriculture, which can be found at agmanager.info here at K-State. It's a good read on all of this. And Jenny, thank you for being with us. And Brady, thank you for joining us from the campus of Purdue University. Appreciate your time as well.
Thank you for having me.
Brady Brewer is an agricultural economist at Purdue, and again, Jenny Ifft is a risk management specialist here at K-State. And we'll be back with more after this final break. You're listening to Agriculture Today. Agriculture Today is back now, and again for you, another wildlife management segment on this Monday edition. And returning is Joe Gerken, Fisheries and Aquatics Extension Specialist here at K-State. Last time you were with us, Joe, we described weed problems in ponds and preventative measures to keep those at a minimum. Today, in the case where a weed situation needs to be addressed after the fact, we're going to talk about control here. That starts, you say, with being sure to identify what's out there accurately.
Yeah, so in aquatic systems, the treatment is going to vary depending on what weed problems you're seeing. So you're going to have a different treatment for filamentous algae than you will for pondweed or coontail, for example. So you want to make sure that you identify the plant. That can be really hard in aquatic systems. That's one of the great resources that I can offer, your local extension office can offer. Send in a picture of what you have or bring in a sample, and we can look at that for you and identify it. Texas A&M has an aqua plant, AQUA plant website that has a lot of pictures, a lot of good resources. So I also like to recommend that to people. But pictures to your local extension agents or to me is a great place to start.
Say one's identified what's out there. Well, means of control can vary, but you'd like folks to start with the mechanical approach if possible.
Yeah, so the more plants that we get out of the pond, the easier treatment's going to be, and the better it's going to be for the pond in the long term. So getting out with a rake, I've seen a lot of ingenious ideas with tractors, throwing gates or something out to help grab onto the weeds and pull them out of the water as much as you can. You want to make sure, too, when they're removed from the water, you remove them from the watershed. if those plants break down, they can bring those nutrients right back into the pond, and you can see issues there. But getting out, doing some hard work, pulling it out is the first step. A lot of times when you do that, you can't necessarily get all the roots, so that's not going to fix it all, but getting as much out as we can is definitely the first step.
If one doesn't get the job done with that, or it's not possible physically to do, that is mechanical removal, there are other cultural means by way of using beneficial fish species.
Sure. So biological control is what we call that, and that's adding fish species to a pond. In Kansas, the most common fish that we see is the white murre or the grass carp. And so grass carp, a couple things that are really important about them. One, they don't really reach their full potential for about 2 years. So if you add them to your pond, you can't really expect immediate results. The second thing is they're really picky eaters. And so they are going to eat a lot of the submerged vegetation. They're not really going to like filamentous algae. So we kind of need a case-by-case basis to know what treatment options we were. Grass carp are a tool. They're not going to fix everything. That's important to remember.
The one thing that you readily get questions about, though, Joe, what chemical means can be used to arrest weed problems in ponds? And you'd like folks to think about that as the other option after these previous.
Sure. So one of the big things with chemicals is that we're killing the plant, but they're going to settle to the bottom. They're going to decompose. So we're really adding nutrients. So we want to try to get some of these other options if we can. Chemical treatment, it's very important to use aquatic herbicides. If you use terrestrial herbicide, the surfactant, which is what makes the chemical stick to the plant, can be toxic to fish. So we want to make sure we use an aquatic herbicide, follow the label recommendations. We've talked a lot about filamentous algae. Mm-hmm. Copper sulfate is really common, blue crystals, but a chelated copper compound, and that chelated is an important word, is going to be a lot more beneficial to killing that algae than other chemicals might be. One last thing I want to mention is that when you use chemicals, you want to treat about a quarter of the pond at a time. The plants will die and settle to the bottom, and bacteria will break them down. In that process, bacteria use oxygen. And so if we're treating the whole pond, they can use enough oxygen, especially in warmer months, to kill our fish.
Again, Extension is a great reference for advice on dealing with weed growth in farm ponds, and Joe avails himself regularly to folks out there to address a specific pond weed control need. You can contact him through your local Extension office. And Joe, thank you for coming over once again.
Yeah, thanks for having me.
On this week's Wildlife Management segment, Joe Gerken. Joe is a fisheries and aquatics extension specialist here at K-State. And our time is away once more. Thanks for listening. Eric Atkinson for Agriculture Today. This is the K-State Radio Network.